everyone, I am Saurabh Shrivastav from the research team at MFA and welcome back to the story of our markets. Today, let's get some insight from last month, a month that looked calm on the outside but had a lot moving underneath. Globally, markets are still in a wait and watch mood. The US Federal Reserve finally cut interest rates in October. And while that's a good news, the Fed also said future cuts will depend on incoming data. Here's where it gets tricky. US government has been shut down for 5 weeks due to the Democrats not agreeing on expenditure hike in the budget. That means a lot of key economic data simply isn't coming out. So the Fed's decisions are happening in a bit of a fog. Inflation nudged slightly higher, but stayed below what analysts fear. And the US economy slowed, growing about 4.8%, the weakest pace in a year. There was also a headline movement. The US president met Chinese Premier Xi Jinping. A few tariffs were rolled back, but nothing close to a full reset in trade ties. Corporate earnings were mixed. Banks did well, but Tesla and Meta disappointed. Still, the US markets held their ground. Bond yields cooled, with a 10-year yield near 4.08%. Gold, after hitting lifetime highs, corrected about 11%. And oil remained steady, between $60 and $65 a barrel. So in short, global markets are cautious, but still resilient. Now let's talk about home. India continues to shine. The RBI kept interest rates unchanged at 5.5%. That's a sign they're confident about inflation staying under control. Our manufacturing PMI climbed to 58.7 and services PMI stayed strong at 58.8. Those are healthy numbers. They show the economy's pulse is steady. GST collections came in at 1.96 lakh crore. And what really stood out? Festive season demand. This year's Diwali sales jumped 47% to over 6 lakh crore. That's a massive jump. And it tells you consumers are back in the game. Foreign investors slowed their selling. FIS sold about 2,300 crores. But domestic institutions stepped in big time, buying more than 52,000 crore. So even with global uncertainty, India's growth engine keeps humming. Now, looking ahead, the big global trigger to watch is when the US government reopens. Until that happens, we could see some volatility. Also, if US economic data suddenly turns strong or geopolitical tension rise, the US dollar could strengthen. And that might create short-term swings in market like ours. But these are short-term ripples, not long-term risks. Here's the thing. We are at an interesting turning point. Last quarter's earnings were muted because companies were still adjusting to tax and GST changes. That phase is behind us now, and quarter 3 earnings should start showing real recovery. On top of that, the government and central bank have delivered what I like to call a triple booster. Lower interest rates, income tax relief, and GST rationalization. That's a strong setup for a next leg of growth. So if markets dip here and there, treat it as a buying opportunity, not a reason to panic. The India growth story is intact, and in fact, it's just getting stronger from here. That's it for this month's story of our markets. If you found this helpful, share it with someone who could enjoy a simple view of the markets. See you next month with another story of how the world of money continues to unfold. Thank you.